we are trying to focus on the strategy, because whatever we choose, the risk will be there, right? For example, now the market is getting saturated for us. We need to definitely come up with the new product or services, because we are a listed company. We'll have constant pressure from the shareholders to improve their wealth. In fact, that is our ethical responsibility. Okay. So when choosing the strategy, like yesterday also we discussed, risk previously was taken care separately. We can choose a strategy, then we can think of what risk we should deal with, how we can manage those risks. But now risk is an integrated part. Before selecting the strategy itself, we should know how we'll manage those risks. If we are able to manage, if we are capable of that, do we have the resource of that? Okay. So first we'll try to understand the meaning of strategy. Then we'll try to link both strategy and the risk. Okay. So strategy is how the textbook is defining is a course of action, including the specification of resources required to achieve a specific objective. So basically there are three important things. Strategy is like a plan, and to achieve that plan, you need a course of action. Action means A, then B, then C, what all you need to do. For example, for an SCS, we have planned, we'll do pre-sin analysis, then F3 we can do, then P3, we'll do mocks, step by step. That is a course of action. Second most important thing is the resources. We can only have a plan which is successful if we have the resources. Let's say an automobile company, they cannot have a plan like Tesla, because they have a very high resources compared to other companies in the industry, right? So every company have different resources. Some are very much cash rich, where some are just startups, or some are medium companies depending more on debt, where others are listed, they can easily raise money for their shareholders. Resources is not only limited to money or finance, it can be your human resources, it can be your expertise, it can be your goodwill, it can be your experience. Experience in logistic industry is very, very important. If you see, most of the successful companies are working more than 50 years, 100 years in this industry. Okay. And last one is a specific objective, specific goal. We cannot just have a generalized strategy. For every specific goal, we need to have the strategy. So different course of action, different resources for different objectives. Okay. So now when we are talking about a strategy, we should know what kind of resources we have, what course of action we are doing, and why specifically this strategy. For example, we'll have a different marketing strategy, sales strategy, financial strategy, risk management strategy, now cyber risk strategy, okay, human resource strategy. All are different and all need to have different course of action, different specification of resources, okay. The primary thing sometimes can be to choosing where to compete and how to compete. Where to compete, maybe which market to compete. How to compete can be you want to go on your own, or you want to go in partnership, or you want to do anything else. Okay. Next is strategic planning. It involves formulating, evaluating, and selecting strategies to enable the preparation of long-term plan of action and attain objectives. So basically, strategic planning also is a part of strategy. So firstly, we need to know what is our goal in the long term, what we are planning in the short term, and how we'll achieve it. It's almost the same as we define the strategy. Okay, let's take some example for our company DAISTRUK. Now for DAISTRUK, if we are selecting a strategy, usually in CIMA exams they talk about acquisition. Let's say we acquire a company in Roundland. So what kind of strategy it is? Acquisition strategy. Okay. So for doing that, first what you will see, what is the course of action to acquire. If you know a little bit about mergers and acquisition, we have discussed in F3 also. First we need to see what is the valuation of the business. Then do we have that much money? Then what synergy it will create, what benefit we are looking for to acquire that. That will be the course of action. After that, we'll see the feasibility. Feasibility is like, do we have the resources? Okay, it is costing 100 million. Do we have it? or we'll raise the money? Do we raise it from debt? Do we raise it from equity? Okay. Then to manage that, do we have the resources? Then also we can talk about the risk. Like majority of mergers and acquisition will not attain the desired synergy. Why? Because they don't have proper planning, or sometimes they overestimate or underestimates their assumptions. And technically, are you able to achieve the objectives? Let's say in our case, our objective was to get 20% more market share, 10% more market share. 20% is very rare. Let's say 10%. Have we achieved that? Or maybe we want to increase our sales by 20% or increase our profit by 10%. If you acquire some company which is same like us, it might create more synergy by saving cost and a lot of other things. That becomes a strategy. Okay. Now, strategy can be of when you are setting a strategy. Okay. Now we will be playing a role of a senior manager. You are reporting to the board. So a senior manager or a strategic level, it is called, is a corporate level. It's also known as corporate level. So somebody who's sitting at the corporate level should understand the entire business at middle level, which is known as business level, and operational level, which is known as functional level. How the strategy will be successful there. Especially in our industry, our business is more of flat organization. Flat as in the hierarchy is less compared to some businesses where there will be a lot of hierarchies. Like 4 people, then a manager, then 4 managers, another manager, then senior manager, like that. So we need to be very careful what we are putting up will be successful or should be successful in business level and functional level also. Okay. For example, last time we were discussing about health and safety issues. What if there is an accident or what if there is a breakage? It's more of operational level issues, but definitely it will affect our objectives. So companies can think of how we can use technology, how we can give immediate support, how we can have emergency numbers, how we can have our own applications, okay, how we can give them access to the support system. All this will come in. Okay, going down. Any questions on this?
No.
Hello.
No, clear.
No question.
Hello.
Just 1 second. There is some problem with this. I'm not able to see this. Okay, then they have given some models for strategy making. This is mostly useful for individual P3.
Yeah.
So just to
Misbah,
give an, yeah.
can you just maximize your screen? Actually, it's showing very in a small template.
I think.
Make it 125%.
Yes, better.
Yeah. Okay. So this model is usually used for individual papers. You don't need to learn it. But if I can just give you an overview, there are two types of strategic planning companies do. One is like very formal and very long term. That can be used for 4 years, 5 years. And rational model is one which is very long term planning. Okay. And long term planning will be suitable for the companies which is more stable. Okay, so when you're doing long-term planning, you have to follow certain steps. Like here, they are talking about knowing company's mission and objectives, then trying to link it with the internal and external environment. What is internal environment? We can look at our strength and weaknesses. What is external environment? Looking at our opportunities and threat. Based on that, we can see what is our position. Then we can think about the best options we have in the current situation. We'll evaluate that. We'll look at the resources we have. Then we'll choose one. Finally, implement the things. That is a rational model, or we can even say a formal planning approach. You might just need to know for the exam what can be the advantage and disadvantage of long-term planning. Okay, going down. Yeah, then they have given stages. Okay, this is important. Approaches to strategic planning. Okay, first one is traditional approach, looking towards shareholder and their objectives. Second one is market led approach. Third one is resource based. Okay, so traditional approach means we are just looking at maximizing the profit. For example, DAISTRUK is a listed company. We need to earn money for the shareholders. We'll invest in any project where it is giving us profit. Simple as that. But it has a weakness. What is the weakness? What if we don't have the resources? What if the market is not suitable for that? Okay. Second is market led approach, where we are focusing only what's happening in the market. Let's say an industry leader like DHL or UPS is doing something, we'll also try to copy that. Why copy that? Because we want to be competitive, or we want to do something similar, or we can start our own depending on what the market is looking for. Third option is resource based approach. Resource based approach is about what resources we have. Now we have a very big goodwill. So why can't we come up with other products? We can easily sell it off. Why? Because we have a very big goodwill. We are operating for more than 60 years. Then another resource we have is easier for us to raise finance. Being a listed company, we have a lot of collaterals to give. Raising money can be easier. What can be other core competencies? We have good IT infrastructure. We have IT director at the board. We have proper system in place. That also an advantage for us. Based on that, what kind of services we can provide. Okay. So we'll just stop here and discuss something. Okay. This approaches of strategic planning is very important. I would like to know from each one of you what kind of things we should prioritize. For example, DAISTRUK should go only for maximizing shareholders, or should go for just what market is doing, or maybe focus only on the resources we have. So tell me which kind of strategic planning will be suitable for DAISTRUK, or we can say general for any company also, and why. Which one you want to prioritize, or which one you want to go, given a scenario. Let's say you have three options to take the decision. You get a question in exam. Shall we go with the traditional? You have three projects. One project is just focusing on increasing the profit. Second is making you one of the market leader. Third is focusing on the resources you have. Which one would you recommend that our company to choose? and why?
I think market-led analysis, market-led approach.
Market-led approach, Simanchal. Okay, why?
Because we have to see what's going on in the market currently. Even if we have resources, if we misutilize it, we will not get the profit. We have to see what is going surrounding. No.
But Simanchal, okay, imagine you are saying market-led approach.
Yes.
Imagine we don't have enough resources for that. It needs a lot of money we don't have. Then what you will do? And maybe it is not very profitable for us. Already in the pre-scene, they have given share price fluctuating. Still, you'll go with market-led?
Yes.
Yes, you'll
I
go still. Okay, why?
I need to see what's going on. Means I need to improve. If there is any strength, then I have to go with that.
So you are saying we should just prioritize market.
Yes.
Okay, and what about the other two? You want to ignore it completely?
I think it's resource based.
Resource-based approach. Okay, Smita,
Yeah.
can you explain your answer?
Yeah.
Why you think like that?
Uh, so should a company should invest their all the core competence into the resource only. Then only he can lead the market. Like he have to work on the resource only.
Okay. So what resource base you are saying the market is not demanding that? Let's say that thing is outdated, or maybe again same thing. It is not helping us to earn good returns for the shareholder.
No. If market is not demanding on that resource, then we can go forward with that resource.
There is some background sound. Your voice is not clear.
Yeah.
Okay. Others, Mega.
Yeah, so I feel it should be a mix of market-led and resource-based. And once we do a mix of it, ultimately the shareholders' objective is going to be fruitful. Mix of both because we need to know what our core competences are, and ultimately we are working on that. At the same time, we need to know what is happening in the market, what our competitors are doing, so we can benchmark it and grow accordingly. So ideally, a mix of both is required, market-led and resource-based.
Mix of both or mix of all three? You are saying.
Ultimately, it'll end up all three. I feel like if you do both the market-led and resource-based right, we will be able to achieve our shareholders' objectives. So I feel ultimately we'll end up doing all three, even if we do just market-led and resource-based.
All right. Maybe it can compromise for the short term, but long term
Yeah.
it might. That's what you mean.
Exactly.
Okay. Good point. Quick answers I want so we can move forward. Everybody, Badusha, Jitu, Shiv, Vineet, Vinitya, everyone. Quickly.
Yeah, I also feel the same thing as what Mega has told. Like, mixture of all three. So that would be good for the company, DAISTRUK.
Can you give an example for our company? A
For like
scenario where
traditional,
it is, yeah.
yeah, for traditional approach, if you look at that, that we are fulfilling our shareholder objectives, right? So we are making profit also. We are not into the loss making company, correct? So that is from there, it is already covered. For market level also, we are looking at the other competitor also. At the same time, like, if there is an opportunity in other countries as well, so we can invest there. With the help of, we have the financing capability, we have the finance because our gearing ratio is low, so we can take some debt also, right, from the bank. So that also opportunity is there, right? We can take loan and we can invest in other countries. So that is also there. And resource base, yeah, again, it's like we have a huge number of fleets and huge number of yeah, employee strength. So in that way, we can also do this planning.
All right. This is fine. Just one question adding to that. Can you think of a practical strategy where all three can be answered? Let's say acquiring a similar logistic company, or going into warehousing, or going into a new country, acquiring a company, same into logistics. So like this, do you have something in mind where all three will be answered? Let's say there is a question. Give a scenario where all these three strategies have been taken care of.
Mm-hmm. Okay.
So what will
I
be the
think,
option?
yeah, our carry, like, there is our competitor. If we can acquire that, or like in the real scenario,
Carry you want to acquire?
yeah,
Do you
we
think we can acquire carry? It looks bigger than us, or at least similar to us.
yes, similar to us actually.
Acquiring carry may be difficult. We can go for a merger.
Merger, yeah.
But remember, if you go with a merger for them, we are already having a very big market share. We are one of the market leader. They are also the market leader. So competition authorities will mostly not allow this because it will create a monopoly.
Correct. But the ratio, like, 25% as per the UK benchmark, right? That they treat as a
Yes.
monopoly. So we need to look
Yes.
that percentage also. If it is below 25%, then it's fine, right?
Mostly it should be about 25 only. Because when they say
Okay.
leaders,
Mm-hmm. Okay.
so basically my point is we need to consider all the things when we are recommending something. If you say acquire carry, then technically that question won't be right. Even they have not given, but we can assume.
Okay.
Okay. So can we say that right now we have only ports. We don't own any ships from us. So we can look into acquiring, or buying new ships. For that, we can look at our strength, like how we could put our resources to use in this situation, where we buy our ships or either flights, and then look at how the market is and see if it, aligns with our shareholders and their objectives or the mission of the company and all.
Possible. That can be also a good way of moving forward.
Yeah. So since we already have port, we have a resource. Like it's a resource-based stuff. We have port, and the next best thing is to get a ship or couple of ships. So that way we can analyze the resources, or do a market research and see if it's the next best thing for our company to do.
Right. Anybody else?
Speaking of ports, what
Yeah,
we
man.
can do is when all three to have it combined is either we can acquire any other ports besides the two ports that we already have. There are 6 in total, right? So for among the 4, maybe we can acquire anyone, or we can go into joint venture with the government, not necessarily just in Roundland, even in the other countries as well, with the aim of automating it. We can show that we are a classic example of the 2 ports being automated. So we can have come into a joint venture saying that, okay, we'll automate the port for you. So ultimately, all 3 will be satisfied.
A very good point. So what you guys do is whatever this points we are discussing in your notes, also you write it down, because these things are definitely being tested in exams. Sometimes they'll ask how we are discussing, or sometimes they'll just give an option directly and say, do you think it's a good option? And you can justify by saying that, this is good because this is a resource-based approach, or this is good because it's a market-led or traditional approach. Okay. And coming to the logic, there is no legal requirement or anything. We can prioritize one, or we can do all 3. It's up to us. Technically, if we just take one, it's very difficult to ignore other 2. So we can prioritize one, but still we have to take in consideration other 2 also. Let's say we prioritize market-led because market is not in good situation for us. We are not having a good past in last 2-3 years. So we can use market-led. And traditional and resource-based will be second and third priority, like that. And let's say in other situation, when we are making very good profit, we'll focus on shareholder based approach, traditional approach. Then market led and resource based will be number 2, number 3. Like this, we can have a mix of all. Okay. Moving to the second, approaches to strategic choice. Porter's generic strategies: cost leader, differentiator, and focus. So usually companies have two types of products or services. One is cost leader, when we are like giving everything for very less price, and that is one of the USP, unique selling point for us. That doesn't mean the quality is cheap, but we are working on a very big economies of scale. Mostly like Chinese products, you will see. Not only Chinese, but most of the products in market are cost leader. I would say 60 to 70% are cost leader. Then another option is differentiation, where there is a higher perceived value within the clients and the customers. They believe like, okay, this is worth paying extra. Sometimes it can be actual value, or sometimes it's just perceived value. Perceived value because of your brand, or you have big celebrities representing your brand, and you have made it such a way. Okay, and focus can be focus on cost leader, focus can be differentiation, and focus can be a specific market, like that. So according to pre-scene, I believe mostly we are into differentiation because the level of things we are doing, the level of service we are providing. However, same business can be in cost leader also and differentiation also. If you see most of the businesses, they do cost leader and differentiation. If you take Tata's, for example, they have economic car also, they have Jaguar Land Rover also, which is a differentiation car. If they do both, they kind of cover 80 to 90% of the market. In our case, DAISTRUK is going into developing country, and if you feel like the charges we are doing in Roundland might be difficult, so we might have to change the pricing. It's okay, we can move to cost leader, provided that we get bulk sales, we get good quantity. So in economies of scale, we can still grow. Next is Ansoff's matrix that talks about market penetration, market development, product development, diversification. So we'll see all 4 options. This also you guys need to put in your analysis. First thing is market penetration. That means same product, same market. The current market itself, how we can improve that. For example, how we can bring in more automation, how we can bring in more market share. Maybe through you'll do more marketing. You'll have better experience. You'll have less churn rate. Churn rate is like customers leaving us. We'll have better relationship with them. Okay, that will be a market penetration. Second option is market development. Same service you want to take to a new market. Let's say from Roundland we are going to Eastland, we are going to Westland. That can be a market development. Usually in this type of companies which are already the leader, market development is a better option. And we are operating for more than 6 decades now. Sometimes we have goodwill in the country, obviously, and sometimes nearby areas also, neighboring countries also. Because of social media and everything, there are a lot of business people who might know our brand. Next option is product development. Within the same market, we can come up with a new product. Like last time we are discussing, why can't we go into warehousing full-fledged? We already have the experience. It's just about acquiring new assets, new properties, and trying for it. Because we already have the experience, we already have the expertise, we have our data. We might have to improve a little bit of IT infrastructure. This can be successful. Next option is diversification. Diversification can be related within our industry. We can do something new, or sometime we'll go outside the industry. That is known as conglomerate. From logistic now we'll go, okay, we'll go into, let's say, electronic manufacturing. We'll go into tire manufacturing. It can be anything. We can go into some other services. Just to diversify, because if there is any problem in this industry, which is very much depend on the economic situation, we can go into other industry to diversify the risk. However, there is one debate on diversification of like a conglomerate. The owners, who are the owners of the business? The shareholders. So it is assumed that shareholders themselves might have put their money in different industries. They want us to be successful in this industry. Why you want to go in different industries? Let's say you are going into clothing, you are going into electronic. Maybe shareholders themselves have diversified their portfolio. They are not dependent only on our business. That is one of the things. But on the other hand side, it will be good for us. We already have a good brand. If we go into different industry, we can diversify the business. Diversification is the best source of mitigating the risk also. In COVID, you must have seen a lot of hotels and this, even airline companies, they have faced very bad days. But companies who have diversified, which were the conglomerate, they were still better off than the companies who are just focusing on the same industry. Because in some places they survived because of the government support, in some places they collapsed. So a quick question, can you give an option for market penetration, market development, product development, diversification? What will be the 4, or just 1 or 2 also you can give? What will be the best option for us? Assuming we are looking for growth, out of 4, which option you believe will be best according to the current situation of our company, DAISTRUK?
I think market development, because we are already very mature in the same market, so it's time for us to just go and explore the new market instead of being sitting here. Because if we go for a market penetration, probably the growth will attain, but the percentage of growth will be very less, right? And diversification can also be possible, but it has to be a related industry altogether. Because so for example, if we are into logistics business, we can probably go and do some freight forwarding or transporting company, or maybe packaging company in a different in the same country, right? So that can be an example of diversification. But I think the best idea to gain more market share is to do market development.
Okay, very good. Others? Maybe if somebody want to answer market development again, you can extend your answer by saying what kind of market you will choose. Jitu, can you answer this?
Yes.
Yeah, please.
I am goes with a mix of market penetration and product development.
You are favoring market penetration, product development. Okay, why?
Which means currently we have a strong customer base, so we can invest in that and strengthen our customer relationship to attain a advantage over carry.
Okay.
Then in the product development side, we can focus on specialized services for the oversized load transportation.
Oversized load transportation. Okay.
Which means we had an issue regarding those motorway.
Right. So maybe we'll go like a focus product, like
Yeah, I mean that
focus.
that will come under the product development, right?
Yeah, it will come in product development, but you'll go only that very heavy loads.
Yes,
which very few companies might be doing.
Yeah, we can create a new product. I mean, new services for the oversized load transportation.
Right. One more thing we have to consider is, if you are recommending something, you should know how much revenue will come in from that. If you just do market penetration or product development or anything, we should know how it will affect, how much revenue will be increased on that. Are we able to diversify risk also? This is from the risk perspective also. If it is just increasing 5%, 4%, then
how
not
can
a very
we?
good.
I mean, to be honest, I don't know how can we connect that to the financial perspective.
Right. It's okay, financial perspective, but we just have to see. You can add one more point, that we have to see the financial viability of it. How much returns it will give. Is it worth, cost and benefit analysis we have to do. That's it.
Okay.
You don't need to know the exact numbers.
Okay, fine.
Yeah. Anybody else wants to add points here? This is 100% coming in your exams. Okay, 100%. At least one of this scenario. So what we are discussing, why we are spending time, same options and solutions which we are discussing will be your answers. Sometimes you have to choose, or sometimes they will only choose and ask your opinion. Shall we go for the market development? Shall we go for the product development? Like that. And every time you have to justify why. Vineet, you want to add any point here?
I think market development and product development would be the better option. Diversification would be risky option because diversification will require a huge investment also. And
Very
if
good.
any product that fails, then it will result a huge loss. And also you may divert your position to a new market. So you are giving space to a competitor to enter your original market. So this will result so product development and no, product development market development would be a better option than diversification.
Okay. Good. Yeah. So when you're writing in exams, they'll give you all the other analysis also. You have to look from SAF model, what we call suitability, acceptability, feasibility. So in that, your financial, your risk, everything will come. Okay. So when you're making analysis, please put some options in market penetration, how you'll do, some options in market development, product development, and diversification.
So
Next
we need
is
to
approach. Yeah.
choose like from different perspective, like from financial perspective, from risk perspective, like that, right? When we decide
You
to
have
go
to
with
touch
like
the points. You know, you have to touch all the dots. And anything
okay.
you choose will not be right in all the things. Maybe sometime it's a very good deal, but it's very risky. Or sometime it is everything is okay, but very costly.
Okay.
So based on all of the analysis, you can recommend one. It's not, I mean, it's very rare that you'll get an ideal situation which is less risky only. Finance is also required less. Returns are also very high. We already have the experience. Like this situation will be less.
Okay, but in
That's why,
exam point of view, they will give this
yeah,
some sort of information, right? Then only we can
yes,
decide or we can analyze.
they'll give a lot of information. In fact, one page they have attached material. We'll do that
Okay.
mocks also. Going forward, we'll do mocks. We'll get confidence on it. Don't worry.
Okay. Okay.
Then approaches to strategic implementation. Let's say we have decided for product development or market development. Two options I'm taking. Now next challenge is to decide, shall we go for acquisition? Shall we go with organic growth? Usually big companies like DAISTRUK, they'll go with acquisition because organic growth can take years and we don't have time for it. We can just pay off the money. Sometimes it will be costly, but it will be a very quick process. We'll have all the system in ready. Let's say we are going to a new country, we just acquire a well-settled company, small to medium company. If it is a very big company, it can be a challenge in financing it. So we go for a medium company. It depends. Okay. And then due
How
diligence also.
DHL grew actually, because based on the DHL, they acquired all this company or they have their own organic growth actually.
So it's mix of both. Usually big companies will go for acquisition only. And one of the reason they acquire is not only for the strategic point of view, just to eliminate the competition.
Competition, okay.
Like yesterday I was telling about Byju's.
Correct.
How they are doing in India, and even Google. All big companies keep on acquiring. Every month they acquire so many companies just to kill the competition because they know in 5 years, 10 years, this thing can become a threat for them.
Correct.
Another reason why acquire, especially for market development. When you go into a new country, these people are already doing business. They understand the culture, they understand the credit, they understand the legal point of view. Lot of this. So we acquire that and move forward. In fact, some companies even play more safe. Before acquiring, they want to go with strategic alliance, joint venture, partnership, all of this to understand that company, especially if that company is big. So it's like they do friendship first, then they go into relationship like that. If it is a merger, or other way, when they're acquiring, they want to get the details, then they buy it off.
Okay.
Yeah.
Hi, Ms. Ba. I've heard a news like usage of vertical takeoff and landing aircraft. So if we can use that in our business, that will become under the market penetration, or that's a product development.
Sorry, can you please repeat?
I don't know exactly which company used that, DHL or UPS. They are using vertical landing aircraft for the transportation of. Yeah.
Okay.
So we can, if we use that in our fleet, then it will comes under the market penetration or product development.
So firstly, when we talk about product development, this means we are launching a new product, new kind of service. What example you are giving, I think it's just we are improving on the current service we are doing.
Yes.
Ultimately, it can help in market penetration.
Okay, yeah.
It can help. Okay. Going down, yeah. So joint methods also we have. Okay. So another option, as I was telling, is the joint things. Okay. Joint development methods can also be done. So now benefits of long-term planning. As I talk about the rational model, let's say DAISTRUK does a very long-term planning. So how it will help us? Basically, in today's industry and today's world, the world is more dynamic. So long-term planning is very rare to survive. Let's say 5 years down the line, we don't know what will happen. But when you're a big company, you should have a long-term plan. It's very suitable to get confidence from the stakeholder. It can help to raise finance. There are a lot of advantages also for long-term plan. Some of them they are given here is forces managers to look ahead, because many times managers are involved in day-to-day pressure. Like quarter end is going on. If I call students, they are not picking call. They're super busy. Just quarter end. Forget about how they will think about 5 years down the line. You guys also know from your experience. Managers, senior managers, everybody are just working on the short-term goals. Most of them actually. But if you have long-term planning, it will make them think about the future. Then identify key risk. Key risk not only we are facing now, but to achieve that objective, what can be the key risk? We can think, okay, what kind of disruption can come in? Okay. Then improve control. Improve, if you know the risk, you can put a better internal control. So likewise, control will be improved. Encourages creativity, because we'll also try to disrupt the market. We'll also try to come up with something new of our own that will improve the creativity. Other types of long-term planning is it will give a good confidence to the stakeholders. Okay, it can help us to improve the profile of company. It can help us to raise finance easily. So a lot of benefits we can talk about. Whereas if we go with the problems, failure to identify threats can happen. This is just opposite. Let's say we don't do long-term planning, especially if you see startups, small and medium companies, family businesses, they don't do very long-term planning. So first is failure to identify threat or failure to identify risk also we can say. Strategic drift can happen. Wherever they feel like, okay, there is a profitable venture, let's go for that, strategic drift. Then difficulty in raising finance. What is the advantage here might become a disadvantage here. Last one is management skill. When you don't have long-term plan, the management should be very, very skillful. Because here everything is set up. Even average managers can do it because they know what is the step after A, then B, then C. Here there is nothing planned. Skill of management will be very, very important. And if we talk about risk related to formal planning, setting corporate objectives can be difficult. Now, if we say for DAISTRUK, what should be the target after 5 years? Might be difficult. Sometimes we can put it very vague. We want to become the number one logistic company in the world. But number one in what? How? Okay. Because logistic is very, very big. There's so many types of logistics. 1PL, 2PL, 3PL, all of this we have seen. Then short-term pressure. As I just said, short-term pressures only usually managers will focus. Then difficulties in forecasting accurately. Not even accurately, but forecasting itself is difficult. Most of the times we'll try to take the previous data, based on that we are building up something. Sometimes we'll add some one-off events and all. But forecasting will be very, very difficult. In fact, it will take a lot of cost. Then you need to hire experts. You need to take some additional or external help. Next is bounded rationality. Bounded rationality means whatever decisions we are taking is bounded by the information we have. And no company can say they have all the information, exact information, because information keeps on changing. Because of bounded rationality, we can end up taking a wrong decision. Next one is rigidity. If we already select something and maybe, let's say we plan something for 5 years, 2028, but in 25, 26, we are thinking like, this thing is not happening. But because we have invested so much money, time and resources, become rigid. No, this will happen. This will happen. That will take us out of the competition. We'll start losing. Next one is cost. It is very costly process, because if you are doing something, it will take financial cost, human resource, it will cost in different areas. Last one is management distrust. The own management team of DAISTRUK might not trust. Senior managers, they will not trust. And many times they are just working in short-term pressure, or people are looking to switch companies. So they will not buy in. They will not be taking it seriously. That's the risk of formal plan. Like these questions, actually they won't ask, but it's just good for you to understand. It will help you to improve your answers. For example, they say, we are going in joint venture, but in 4-5 years, we want to acquire that company. So you can say it's very difficult that this thing will come true, because 4-5 years, the entire market dynamics will change and the valuation will change. That company can go big, or that company can become failure, a lot of other things. So whenever the time is more, the risk is also more. So which approach to strategy should we adopt? What do you think? DAISTRUK should go for a long-term planning or should go for a short-term planning?
I think long-term planning, because
You think long-term planning?
yes, because short-term planning or logic, there is another strategy which is called logical incrementalism.
Incrementalism.
Yeah. That is mainly for the fast-moving industry, but for such industry which is already very mature and they have a fixed infrastructure in the market and they've been doing for decades, I think the long-term strategy is more useful, and that has to be measurable, achievable, and attainable, within the
Smart. Yes.
resources which company has. Yeah.
And how you'll manage with the risk of that, Wafar? Rigidity, cost, bounded rationality. Wafar, can you hear me?
Sorry, I was on mute. No, I'm saying it should not be like very impractical in a way that for example, we are now in 2023. We know how things are going to be based on our forecast, like our sales forecast, for example, how our profitability looks like, what are the customer base, and so right. So it has to be like we make a strategy for the next year and then for next 5 years, but it has to be like very achievable. Should not be like hypothetical, which is very difficult to achieve.
Right. So we can have a strategy which is a little bit flexible.
Yes.
Have a long-term
And then,
plan, but make it flexible. Basically,
yes,
this
so
is a E3 chapter. In E3, we'll see in detail. So we have another
Yeah.
option also where we can be having a long-term planning, but we can jump. Rigidity is not there.
Yes.
It's called which approach?
Emergent, right?
Emergent approach. Yes. Anybody else wants to answer this? What approach shall we follow?
I think there should be a long-term planning, long-term approach,
Okay.
and there should be some emergent approach also if there is any change in market.
Okay. What about how you deal with the risk? What they have given: forecasting difficulties, bounded rationality, management distrust, cost. Simanchal, how you'll
Yes,
manage this risk?
definitely this disadvantages will be there, but we'll try to reduce it to some extent. Like some rigidity will be there, but we'll try to avoid, not avoid, we'll try to reduce it to some extent.
Okay. Anyone else wants to answer this? All right. So we'll move forward now. Whatever we choose, we'll have some, advantage and disadvantage, and we have to choose it. We cannot just say we want only the upside of it. It will definitely come with the downside. Second thing to choose between is the industry we are. If it is a stable industry, long-term plan is is good. If you have inexperienced manager, long-term plan is good. Whereas if our industry is very dynamic, then long-term planning is not suitable. If you have innovative managers you can trust on, then short-term planning is also fine. We can depend more on the managers. If you need money from the market, external finance, then short-term planning is not very much suitable for us. Industry like us and even a company like DAISTRUK, definitely we are very big. Without rational model, it will be difficult. Without long-term planning, it will be difficult to gain the confidence of the shareholder. At the same time, if we become very rigid, we cannot be competitive. So we should have long-term planning, but flexibility is also required. Emergent approach can be a good one. Okay. However, what I am saying, if you disagree with it, you can even say, okay, I think we should only go with the short-term planning, one year planning. And if you justify it, that is also a correct answer. So in case study, all of us can give different answers. For one question, we can have 100 different answers and all 100 can be correct. So it's all about how you justify. Why you think like this?
I have a practical example. Okay, so I've been a part of discussion where they discuss about 5-term strategy, 5 years long-term strategy. Okay, so for example, if a company is at let's say 100 million revenue, they wanted to become $500 million revenue, right? So they define CAGR, which is basically compound annual growth rates. Based on that, they build a strategy. But that strategy, sometimes what happens, let's say we are in a year 2 or year 3, things are not moving as we expected. COVID happened in between, for example, right, which hampered the growth rate of some of the business units. So what they do is basically they sit and they analyze the situation, how they can overcome it. Like it cannot be like probably done through the organic growth. Then they look for some other options, maybe going into small acquisitions. They acquire a company, they drive their revenues from there, change their pricing strategy into the market, you know or doing some other actions which can lead to attaining those kind of goals. So yeah, rigidity I think is not an option at all for a long term planning, because we cannot control the external economic factors which may happen in the business. So that only comes to know as time passes. So my experience is that rigidity can never be an option. However, the goal has to be attainable, and at the same time, there has to be like a proper check and balance on a year basis to see where are we landing.
Very good. So long-term plan, that should be break out in smaller plans and should have a considerable flexibility also. Super. Then next section is about non-for-profit. We are profit-making companies, but we should know a little bit about how NFPs work, because they are also one of our stakeholders. When we are making stakeholder list, we have to consider NGOs, we have to consider charities, because many times we have to work with them to improve our reputation. And when we are doing CSR, we need help from these companies. So they don't work for profit. Profit is not their primary motive. What they work for benefit of the members. So how they see their performance? So they do on 3's, that is economy, efficiency, and effectiveness. Economy is about the input, what level of input they are putting. Let's say it is a government hospital, they'll say how much we are charging. Efficiency looks at the link between outputs and inputs. So how many people we have treated, that can be efficiency. Effectiveness looks at the output and ultimate objective. That means actually how much people were cured, what was the percentage of people, sometimes how many people died and how much we have saved and how quickly we recovered. Ultimately the effectiveness. So economy, efficiency, and effectiveness. But the problem here is, if the economy is there, let's say they are charging very low, so achieving effectiveness can be difficult. Economy and effectiveness are like opposite. Sometimes it can be used for service businesses also. When we are keeping the prices low in economy, then effectiveness can be compromised. So there will always be conflict between economy and effectiveness. If you just try to understand it in a practical example, look at government schools. Government schools are very economic. The fees is very low. Even efficiency is somewhat there. A lot of people are, even passing. But how many of them are actually getting very good result? How many of them are coming in merit, scoring 75, 85%? very, very less. So efficiency, economy is somewhat there, but effectiveness they have failed. But if you look at private schools, bigger schools, effectiveness is there, efficiency is also there, but economy can be difficult. Okay. So going forward, approaches to strategic planning, we already discussed traditional, market-led, and resource-based. We can go down now. Now, strategic analysis and choice, just an extension of that. We have already discussed where to compete, how to compete, right? Based on the product, the service we are doing. Is it cost leader? Is it differentiation? Like that. And second part is which investment vehicle to use. Which investment vehicle to use is also very important. These points we have already discussed somewhat, like cost leader, they want to work on economies of scale, differentiation, focus. We can go down. Market penetration also, we have discussed it. You can just read it once again, you'll get an idea. Diversification also we discussed. Less risky, more risky. Acquisition, mergers, organic growth. Benefits and risk also is done. Does anybody has confusion in understanding that? Okay, we can discuss this due diligence 1 minute. Okay, what is due diligence? So basically, when you go for acquisition, let's say for acquisition, you'll do they will do a business valuation, the seller, and now we are the buyer or acquirer. So we cannot just trust them what they are saying, because we need to know from our own experience, from our own expertise, that whatever they are saying is trustworthy. Okay, so therefore we do due diligence. I can give a real example. One of my student companies were going in loss in Middle East, and they put certain number to sell it off. So the buyer was interested, and the buyer said, okay, I'm happy with this, even the price he doesn't mind, but he said, I'll do a due diligence with some big company. So he went to KPMG, I think. They did due diligence, and after that they found the valuation they were showing is 10 times more than the actual valuation. Then it created trust issue. That deal never went forward. And obviously every seller want to show maximum price. It's not wrong or illegal. Ultimately, it's all about the buyer and seller. If they are happy, they can buy and sell at any rate. There is no problem with that. But as a company, for risk management, when you're recommending something, always mention that it should be done after due diligence. What is due diligence? It is an investigation of business prior to signing of contract. This can be in mergers, acquisition, even strategic alliance and joint partnership. You might be thinking, why in joint partnership? Because when you're signing a contract, after the contract, there will be a lot of expectation from other parties that they will do this, they will do this for us, or maybe other parties also thinking the same. So both will be just passing the ball on each other, nobody taking the responsibility. So everything should be in detail prior signing the contract. It relates to the process through which a company will evaluate a target and their assets prior to acquisition. Provide information that allows for more informed decision making regarding the acquisition. Due diligence is a control to reduce the likelihood of overpaying of a target company. Usually it is for overpaying. Even we can say it is for risk management also. Why risk management? Because maybe that company, everything is fine, but that company is unethical. Now we have acquired it. Their unethical things and their reputation will affect our reputation because it's our company now. Even if you do partnership with unethical companies, sometimes they even tend to do some illegal activities, just not giving proper health and safety at work, not major but in a minor way also, that can affect our reputation. What are the main areas to do due diligence? Are financial statements we have to analyze. We have to see, are they strategic fit to us? Employees and management issues, what are the management practices they are doing? Property, okay, what are the property they have? Is it used to take loans against them? Then competition commission, is competition authority allowing for us? Let's say we invested so much money and now we are going for acquisition, and currently we get a notice from the competition authority, this cannot be go forward because of monopoly or maybe because of any other reasons. So all our time, money, resources is wasted. Intellectual property. So intellectual property is usually only, taken care when it is transferable. Let's say that intellectual property is because of the owner's personal goodwill and his or her brand, then we cannot pay extra money for that. Then contractual review, have to be very careful. Pending litigation, if companies have litigation, who will deal with that, how they will deal it, how much it will cost. Taxes, do they have tax pending and all. Insurance, do they have insurance. One more thing they are missing is debt, how much debt they have and what to do with the debt. Debt is very important. Sometimes debt can be transferable to the new owner. Many times it is like you have to pay before acquiring it, or they have to pay before selling the company.
But it will appear in the financial statement of this debt, right?
It will appear the debt, but the details you have to go. Is it transferable or not? What type of debt it is? Is it convertible debt?
Okay.
So dealing with debt sometimes can be a challenge. Let's say debt is not transferable. It is showing that, but in financial statement, it won't show it's transferable and all, isn't it? And the target company doesn't have money to pay for it. Then you have to pay for it and it will be deducted from the total value you're paying. But if you're doing share for share exchange, then it will be difficult for you. Let's say it is not transferable and you also don't have, DAISTRUK don't want to give cash. They want to do share for share exchange. Then it will be a challenge, isn't it?
Yes.
So all this need to be considered. Therefore, companies will have their legal team, their experts doing that. They have given some other examples of joint methods that are joint venture. We can go for a joint venture. Some of the principle you can use, I can suggest you. If you are going for an acquisition, it's a small company, it's fine. But if you want to acquire a big company, if possible, do a joint venture, strategic alliance, or any type of joint method. Why? After doing that, you'll become, or you'll understand them in a better way. When I was studying, my teacher used to say, merger, this merger, acquisition, all mergers is like marriage. So cultural difference will be there. So first, what you'll do, you become friends, family friends, then go into relationship. Same thing here. If you do a joint method of expansion or a joint venture, you'll get some insight. Not everything, obviously, but at least some insight. You know them for a year or two. You at least understand the culture, how they behave in good times, how they behave in bad times, how well they are coping up with the stress. So ultimately, it will mitigate the risk. When you talk about joint method, none of the business is losing the ownership. A joint venture, a separate business entity whose shares are owned by two or more business entities. It's not necessarily only two companies can do joint venture. It can be three also. For example, a lot of airlines companies are doing joint ventures now. Why? Because all of them have a same concern. They are the highest polluter. They want to reduce the pollution because their industry and all, they are having a lot of bad reputation because of this. Even the government is supporting them. So no point doing R&D and everything separately. If they come together, they'll have economies of scale and it will be a win-win situation. Same thing can work in strategic alliance. In fact, if you see the industries where the R&D and all of this can be very expensive, they go with the strategic alliance. Maybe in the market, they are competing. For example, I think it was BMW and Toyota. They also went for strategic alliance. They were doing research on the tires. So whatever result come, they'll just share it. However, we need to be careful. If we do strategic alliance with a very big company, let's say Google does a strategic alliance with a medium company, definitely Google will overpower it. Even in contract and after that also, they will influence it. So it won't work out. Usually if they are same size, it will work out. As a cooperative business activity formed by two or more separate organizations for strategic purposes that allocates ownership, operational responsibility. Basically, risk and return both are taken care of. Next option is franchising, the purchase of right to exploit a business brand in return of capital sum. So this will work in some types of like KFC, McDonald's, this type of business restaurant chain, it will work. Then we have licenses beyond that where they can share some details and they can start the manufacturing of that. This work in liquor industry and sometime in medicinal also, where they give a fixed sum and they allow them to license. Next option is outsource. Outsourcing means contracting out aspect of the work of organization previously done in-house to specialist providers. Okay, we can discuss a little bit more here. This is important topic. We are a listed company. We need to have internal audit, right? However, most of the companies you will see they'll outsource this to big fours or big companies. And from the pre-scene, we don't know that heavy outsource or it is in-house. So my question is, does DAISTRUK should outsource internal audit or should be in-house?
It should be in-house.
It should be in-house. We'll discuss that. And most of the point will be similar. So I'll add another question also. Even cloud, shall we go to cloud to keep our data, or we should have our own data farms and keep our data with it? So shall we outsource that or keep with it? Both the questions.
It depends
And
on the.
You have to justify. Yeah.
It depends on the cost benefit analysis. Ideally, it should be on the cloud actually, like, so we can retrieve at any point of time. But again, if we are putting on the cloud, then it will create problem like later on to retrieve the data, right? Like, because it belongs to third party.
Okay. So you are directly coming that should be outsourced. Okay.
Yeah.
What about internal audit?
Internal audit also should be it should be in-house.
It should be in-house. Why?
It should be in-house in the sense like, it can be reported directly to the, the board, the issue, or the committee. Like, if we employ our own, like we have our own employee, if we appoint the internal audit officers also here, and he has to look after all the stuff, and it will directly go to the board. The report should go directly to the board, and then accordingly we can finalize.
I think internal audit should be outsourced.
Okay. Why?
Because if you have an internal audit within your team members, there will be no transparency and independence. If you outsource to someone, they will be more independent and provide more proven fair view of the opinion and can work freely.
But one thing they can do, like if we appoint in-house also, they can be like, if a person we appoint, it should directly report to the board, not within the senior manager or manager or that. It should directly report to the board. So that should be the
They'll report to the audit committee.
Audit committee, yes, right, directly, not to the other person, CFO or other managers.
Obviously, we have rules for that. They cannot.
Yeah.
So basically, when you're answering this question, sometimes they'll ask, should we do that? Should we keep it in-house? Should we go to outsource? Before coming to any conclusion, you should always list down some advantages and disadvantages. Both will have some advantage. Then you should come to a recommendation, what we should do, and justify your recommendation.
Okay.
Any other points? Anybody who is working in audit department or who has experience should share. Shall it be in-house or outsource? Should it be in-house or outsource? Nobody? Okay.
Generally for the large corporates, what happens is they have a audit department, like internal audit department in the headquarters. Let's say if it is a US or UK based company, they have a department in those main countries, and for the audit reviews and for internal checks and everything, they basically sometimes they conduct the remote audit, and sometimes they conduct the on-site audits. It depends on the materiality, like where the business materiality is huge, right? But generally for a smaller companies, they prefer to give it as an outsourcing thing. But generally, from my experience, what I've seen is these internal audits are done basically in-house, and the external audits are being done by third-party outsource companies. Either it could be Big Four or any other company.
Right. Because for smaller companies, they cannot afford to get the best practices done. They cannot afford to do it in-house. If they do it, effectiveness will not be that good because of the cost they are investing in. So they can
Yeah.
outsource. And external, obviously, it should be out. They cannot do in-house. Okay. Then key risk of joint development methods. Some of them they have given strategic fit, cost sharing, knowledge sharing, profit sharing. What I would recommend in this type of options, you just write from your logic what you believe in that particular situation. Usually question comes like 30%, 40%. So you might have to just take 3 to 4 points out of that and highlight and explain that. Some students will do mistake. They'll write like 8 points, but they won't explain. You don't need to just give points. Points will not give you marks. Points are just headers. Now you have to explain it. Connect to the scenario, connect to the pre-scene, connect to the attached material. So why you say strategic fit is a biggest risk in this situation like that? Because we are not getting marks on just learning this. We are getting marks in the exam to apply to the scenario. Okay. Then risk of international growth, we have already seen chapter 1 also, like political risk, forex, capital investment, same thing. We'll have extra risk when we go to the international operations. Disruption, disruption, especially in tech-based industries, is there. So we have to be very careful what kind of disruption can come in our industry, and if possible, how we can disrupt the industry. If we can disrupt, we can get a lot of benefit. And usually it can be done with the technologies. What are the factors that normally help a disruption to be successful? That is simplicity. It's very simple. Resources is very easily available. Cost, it costs very low. Accessibility, people have it. Quality is a very big difference. Let's take an example of Uber. Uber has disrupted this micro mobility. Why? Because it's very simple to use. It will automatically scan where you are located and everything. Resources, you just need a mobile smartphone, which everybody has. It's almost everyone. Cost wise also is good. Sometimes even lower than the local. Accessibility is there in almost all places. Quality is very high. Trust is very high. Before itself, you can see what vehicle you are getting. Sometime even the driver details will get everything in detail, the reviews, everything. So if all 5 of these are there, or maybe some of this is there, the disruption will be successful. For example, why WhatsApp is more successful than FaceTime? Like in Apple also, you can send photos, and a lot of features were before WhatsApp was doing it, because accessibility was not there. Not everybody was using Apple, or not majority of them were using Apple phones. But WhatsApp works in Android, Apple, everything. So it was better than that. Next is scenario planning. Scenario planning is kind of risk analysis also. Here we are trying to predict. It can be risk also or a strategy also. We try to see what can be the future, and future can be in favor of us or against us. Whatever it is, we try to prepare us management for this. If it is an opportunity, we'll make a strategy in such a way that is a market led it will be. If it is a risk, we'll try to manage it. Okay. Many times it won't happen, but still we are just doing it as a risk management. Best example or successful example is Shell. If you go to Shell website, you'll see a lot of scenario planning, and it has helped them in the past also to successfully manage certain risks. For example, now lockdown happened. Maybe there are some companies, very rare, they might have already scenario planned or have something in the risk. What if there is a lockdown? What if there is a disease or something like that? How will manage our operations? Not exactly the same, but maybe a little bit similar to that. So they would have been in a better place than the normal companies.
So scenario planning may be both in positive and negative way, right?
Yes, it can become an opportunity also, or threat risk also.
Okay.
You have given some upside, downside. Then next is game theory. This is just something like two companies are there. Now we have DAISTRUK and Carry. Let's say Carry reduces the price tomorrow for the same service what we are doing. Now we are also planning to reduce. If we both reduce, both will lose and the customer will win. And let's say tomorrow they increase the price and you're also tempted to increase the price. So they won't tell you what is their strategy. You won't tell them what is your strategy. So a lot of time is just assumption and prediction of the competitors. It's like a game theory. A lot of confusion will be there. But you have to understand the trends, what they are trying to do. Because ultimately, if they are giving discount, you also started giving, you will have to sacrifice on the margin. Or sometimes both have to sacrifice on the margin. So proper research of the market, analysis of the competitor, how they will price, and everything is useful. If you do some research, you'll get an idea how they are approached. Okay. Next, they have talked about stress testing. Stress testing is like how company will perform under stress. If we say our revenue has reduced, our share price is going down, in a tough situation, how will work? We'll test it before itself. So we'll understand, because in good times companies can be performing very good. What if about the situation is bad? How will perform? Can we manage our working capital? Can we manage our relationship with the stakeholders? How well we can come out of difficult situation? Because no business can say every time it will be good days, right? They definitely have to see some difficult conditions, maybe through internal issues or external issues, uncontrollable, which are mostly. Okay. Any questions from that this chapter, strategic risk? In fact, we have touched E3 in that. Half of E3 is done in that. That's what we'll be doing in E3 also. So in case studies, like finding the strategy, then looking at the risk and return out of it, then looking at the financial aspect of it, then you are done for it. And you can recommend, okay, go for it. Okay, so let's move on to reputational risk. This chapter is very easy. It's most of examples only. So firstly, what is reputational risk? We have discussed risk, reputational risk. They have given here the likelihood of losses occurring due to deterioration in the belief or opinion held about someone or something. So textbook definition. Can somebody define reputational risk in their own words? What do they believe is reputational risk?
It's a one kind of risk, like where like in our company DAISTRUK, if some health and safety issue is there, and if some people, some worker died because of that, and media spread in other way around, like in a negative way, then it will create a reputational risk for us, our company.
That's an example. Okay.
Yeah.
So reputational risk is good or bad for the company?
It can happen both way, actually.
Both way. Can you give an example how reputational risk can be good for any company?
See, sometimes negative publicity also, good for us also, right? Like, some sort of like, how I can give example. I don't remember an example as of now.
Right. Mostly it is not, but some case. For
In some
example, if
case.
they want to do a publicity of movie or something they want to make viral, so they'll
Correct.
create a lot of curiosity. Oh, that is something wrong. So people who are not interested, who are not ready to watch, also will come. Oh, they want to see what's the problem here. In movies and this industry, they try to do that. Even newspapers sometimes do that because negativity sells.
Correct.
But mostly reputational risk is a downside risk. Yeah. Anybody else wants to add on that? Okay. So reputational risk is the losses occurring due to deterioration in the brand. So basically the goodwill in the market is going down. Whatever we have currently is losing, especially the companies which are having a higher reputation, they have more to lose than the smaller companies which have very low reputation. For example, company like DAISTRUK will have more to lose than compared to Carry. If Carry is, a newer company like that, or a new or a medium company which is doing in logistic. So when we are dealing with something, we have to be more careful than compared to other companies. We have more to lose. We have more to protect. Right? Companies without reputation, less reputation, they don't need to worry. So smaller companies actually don't worry about it. Why Coca-Cola is always question of that environmental use about their recycling? Why not small companies are being questioned? Because they don't have that much reputation in the first place. So very important, this reputational risk. In fact, in exam also they have asked it and they have linked this to share price. Because of reputational risk, our share price can fluctuate, how to manage the share price, all of these questions they have asked. Many a times it is actually we have done something wrong, or we have been part of some stakeholders who are doing this, or sometimes it's just a rumors. So whatever it is, we are losing. If it a rumor also, we are losing. If it is truth also, we are losing. Even smaller companies, there were a lot of examples of hotels, even smaller hotels also, they were having some rumors that they are not using meat properly, or they are not using this things. Because of that, they started losing their businesses. Then they have to come out and give a clarity. So for reputational risk, best thing a company can do it, they have to be proactively. They should work on maintaining their reputation. They don't need to wait till something bad happened to justify it. Okay, therefore, bigger companies always try to maintain relationship with media. So if anything happens, they don't just try to put that on the newspaper or the screen. They'll try to consult, and they sometimes go on some unethical thing also to maintain their reputation. Okay, so mostly reputational risk nowadays is coming from two things. First is the environmental consideration. Nowadays, climate change, right? Even in COVID times, we have seen a lot of rivers which were not clean in decades were just clean because of the lockdown. So a lot of this is human has caused this, especially big companies. So environmental concern is a very big reputational risk now. Second is social. If we are part of something which is not acceptable by the society, or if you are part of some other things which is having a bad effect on the society, that can also be a source of reputational risk. Therefore, when companies are doing CSR, they prioritize environment and social issues. They try to be safe before itself. They already maintain the relationship there. Next is business ethics. If you're not being ethical, that can also be a big reputational risk. Like I gave the example of Amazon. In 2018, they didn't pay any federal tax, zero federal tax. They used transfer pricing to do it. It was not illegal, but still it was unethical. Why? Because people thought you are making money from this country, you pay tax here only, because tax is ultimately used for beneficial of the society. If you pay in different country, we won't get anything. Then in 2019, they paid a big amount of tax. Other business ethics may be we are using a supplier which is not giving good working condition, which is involved in some kind of practices which is not acceptable by the society. That can also be ethics. In fact, in these cases, you have to be very proactive. When we talk about partnership in the previous chapter, due diligence should be done. There was one scenario in exam that there is a news actually that our supplier is being very unethical and lot of incident is happening at their factory. And the newspaper heading doesn't put their name, they put our name because our brand was big. So they were saying in a very harsh way that we are promoting this type of businesses. We are giving them business. In the real world, if you see, Apple name will come in wherever Oxfam has an issue, right? Everybody will say, okay, Apple is giving them business. Why Apple is dealing with? If Apple was not their client, maybe that company didn't be in news also so much, isn't it? So in that case, we have to do a proper contract. Even we can send our internal audit team to cross-check whatever we have done in the contract. Are they doing it? Are they following it? We have that right to check. In the worst case, we can even cancel the contract and move to other players. So now it is termed as a responsibility. Maybe we are very ethical, but the stakeholders we are dealing with should also be ethical. If we are not dealing with ethical stakeholder, that means company's mindset is also the same. Next is CSR, corporate social responsibility. It's not a legal requirement, but it is good to maintain the company's reputation. So whenever society has any problem, any environmental issues like COVID happened, sometimes flood happened, earthquake happened. So it is expected from the company to support something for the society. Or let's say do some investment for the education, at least basic necessity. Code of ethics, CIMA code of ethics. Usually, if code of ethics is not followed, a lot of companies have policy that they should terminate the employee. Okay, even if they don't do, it can be an ethical issue. Let's say company is not following integrity, they are being biased, that is objectivity. They are not being professional, or they are not putting proper people who are having the adequate skills, professional competency, confidentiality. They are not maintaining the confidentiality. So code of ethics operate to work internally also and to deal with the connected stakeholders or external stakeholders also. If company is not ethical, that can also become a source of a reputational risk. Let's say a CEO is involved in fraud. So maybe general public has nothing to do, but still they will understand, okay, the shareholders lost the money. Maybe the other person doesn't have shares also of that company, but they will have a bad reputation. Okay, they'll say, thank God I didn't invest it. If the CEO itself is involved, what about the other people? Right? So when we are making a policy of everything, we should also be careful that we should know what kind of threat is there, and that should be proper whistleblowing facilities and everything. Like in this case, we need to know ethical threat can come from self-interest, because people are getting remuneration based on the performance. So they might try to alter the performance. Self-review, if they are just trying to review their own work. Advocacy, promoting each other. Familiarity or trust, their friends, family. Intimidation also sometimes can come from the directors and all. You do this, otherwise you lose the job. So person can get intimidated. They're like, okay, just to safeguard the job, I'll do it, even if it is unethical. Adverse interest, two parties having adverse interest can also lead to ethical threat. Sometimes some companies put pressure on the suppliers to do that. That is unethical, but just to retain the contract, they have to do it.
So what is advocacy?
Advocacy, you are just may occur when a member promotes a position or opinion to the point that subsequent objectivity may be compromised. So basically, let's say there are two people who can get promoted. Okay, I'm promoting and advocating one because he's my friend. That means we are being biased. Maybe other person is good. We are not giving that person a chance.
Okay, it may be like self-interest, right?
Self-interest is for self. Advocacy is for others. Let's say I'm your friend and you are like pushing me for the promotion rather than everyone. So that advocacy. You are promoting someone, advocating that. Self-interest is like if I'm doing for myself.
Right.
Therefore, you must have seen at workplace, a lot of people want to gel up with the management or managers in a very great way. And unfortunately, they get promotion also by buttering sometimes.
Yes.
Because of the advocacy only. Maybe they are the same, others are working, sometimes even less. But because of advocacy, they get promotion. So that is an ethical threat. So when this situation comes, there might be a dilemma for the person, especially if you see intimidation. Our boss is saying, that you're working in a company and your finance director is saying, do something. It is unethical. But if you don't do, you might lose the job. So that is a dilemma, what to do. Because you also have an ethical responsibility to listen to the company's management. However, there is a fine line. If it is compromising this basic principle, you don't need to listen to it. Another way is fine. They have given some points how to resolve. So basically get all, you don't need to learn it. It's for individual papers, like gather all fact, go to ethical issues, go to the management. In worst case, CIMA is saying you can contact us also. Even if it doesn't work, you resign from the company, but don't be a part of that situation. However, in the practical world, it's very, very rarely practiced. Then there is a difference between brand and reputation. Okay. Can you tell me what is the difference between brand and reputation? Last 5 to 10 minutes, okay? Please be patient, we'll do it soon. Yeah, what is the difference between brand and reputation?
Reputation is, I think, what people think about us, and brand, what we are making them to think.
Is it opposite you are saying?
Yes, since reputation is from customer side, and brand is our company side.
Okay, makes
Basically
sense.
means we can control brand, which can be controllable. Like the promises we have given should be done. That way we can control it.
Mm-hmm. Okay. Others? Megha, very silent.
Reputation is the external perspective about a company, and brand is something we try to portray about ourselves. So ultimately, for the brand, we have the control, while for reputation, we don't have much of a control.
Very good. So basically, brand is something which we can control, not 100%, but still controllable. For example, we say this is a luxury brand. Why you are saying it's a luxury brand? Because they are always portraying it like this. They are putting high prices, premium packaging, premium advertising. Everything is done at a premium. So okay. And other times, some products are uh, comparatively cheap. Okay, packing is also average. So somehow they are portraying a brand like this. So they are controlling it. And reputation, on the other hand, let's say a brand is promising something and they're doing it correctly, it becomes a good reputation. And they promise something and they don't do, it becomes a bad reputation. However, sometimes what happens, companies doing what they promise, but still people don't like that company, or they don't have a good good views about that company. That become a reputation risk. So reputation risk is very, very difficult to control. And it is external. Sometimes just because of rumors or anything also, it can get deteriorated. It can go down. However, if you are okay with the promises, you are doing it, then we can have good brand and good reputation also. So reputation risk is a part of risk management. In fact, very important part of risk management. So there are some profiles in the companies where they are just focusing to maintain the reputation of the companies. They are aggressively doing this work on environment, society, and all, and posting with the people, so showing that how good they are. So if there is any problem with the reputation, they can just show what good they have done as well. In fact, in the exam also, they say this company is very much unfriendly, they are polluting so much. We can give a counter news saying that, this many plants we have, this many trees we have planted in last decades, how much carbon emission we have reduced, so many things. Even if you go on their websites nowadays, any company, they have their environmental performance. Why? To maintain the reputation. Strategic alignment starts at very top of an organization. Is about the board making sure that goals been achieved. So strategic alignment, if you are doing, then next they are talking about transfer pricing. All of this can be a source of a reputation risk also. Transfer pricing is like we increase the profit where the tax is low and decrease the profit where the taxes are high. I was just giving Amazon example like that. So if it comes, this is not illegal, but people will have to think, okay, this company is not serious. So serious as in they don't want to pay taxes here. So local population can have a bad image about it. So it can also lead to a reputational risk. Any questions on that? Okay, going down. objectives of this transfer pricing. So they have given some objectives also why transfer pricing is important. Goal Congress, performance measurement, maintaining divisional autonomy, minimizing tax liability. We'll see all of this, but now from this risk chapter is all about it can be a source of reputational risk. Even government is taking strict actions on that. They're trying to sometime reduce the tax rate. They are trying to put more strict rules in that so they don't end up losing the tax money. However, some governments are very supportive, and that is known as tax havens, where they offer very low tax on profit. Withholding tax is not there. They are having a stable economy. They have good communications with the rest of the world. For example, we have Panama, Bermuda, Switzerland. These are like tax havens. Last one, other sources of reputational risk are, let's say somebody does a fraud. I gave you an example of CEO. It can be anybody, a senior manager. So why this can happen? This may be because of motive, opportunity, dishonesty. Lot of reasons are there. If these things also happen, can become a reputational risk for the company. Shareholders and other will not trust. They will say internal controls are not there. Why? Because this is a controllable risk. When we talk about external environment, it is uncontrollable. But whenever something is happening internally, that is mostly controllable risk. Especially motive. Motive is a primary source why people want to do this fraud or do bribery and everything. Therefore, you must have seen some companies when they do background check, they even ask what is your commitments, okay, do you have a loan, all of this, because they want to just get rough idea. If you're paying this person, let's say £1,000 per month, and you have to pay £500 EMI, then rent, a lot of this, so they'll put under red flag. Maybe this person will go for other jobs, do moonlighting, or might be involved in something else. They want to get a rough idea about it. Bribery can also be a reputational risk. Okay, before closing, I just need your inputs how we can manage reputational risk. They have given some options here, but I want an answer from you. Reputational risk, and maybe you can give for DAISTRUK. That will be even better. You can say proactive options also and reactive options also, what we can do.
One thing which I could think of is giving a policy to the employees, like in terms of social media policy, for example, not to post anything bad which happened in the company, and launch a launch an awareness campaign for the employees that what kind of communication messages we should post, because most of the reputational issues can happen these days through the social media or through the press, right? So I think this is one of the thing which I could think of. And second thing is to keep on reviewing and checking the internal policies to make sure it is consistent, and there is no loopholes in the policy which might lead to a reputational issue.
Very good. This is more of internal. Okay, if you have any issue with external stakeholders,
External stakeholders, what I have
maybe our
seen in the
clients.
what I have seen in the CIMA books, most of the time, whenever they talk about reputational risk, they talk about giving a clarification to your broader stakeholders. So if anything even comes into the market which is basically negative for the company, the best thing is to align with the right stakeholders and issue a press statement or issue a public statement, so it has become more visible to the people that company is transparent, they are not hiding anything. They are trying to make this statement based on the facts, because I think this is the only way where we can build our trust with the external stakeholders.
Ideally, it's better to have a response team in terms of situations like this. So that team can organize as to what is to be communicated or so. Because otherwise, if there are multiple topics that are going to be communicated to the external environment, then it'll cause a lot of chaos and confusion. So a response team would be ideal.
Good point. So we should have sometime it is known as incident response team. And we should even have policies, because some of the things are very common. And for doing this, we can even see what's happening in the market within the industry and outside the industry also. What type of risk companies are facing, what type of reputational risk they are facing, and what they have done to come up with that, and how effective that strategy was. Sometimes what happened is just a rumor, and your competitor is paying the media to put that. It is a paid thing. So you also have to counter it, saying that this is not exactly true, and you can put your own facts. Because when it comes to business, obviously the competition, we are talking about ethics, but they can be unethical most of the time. So we should be ready to counter that. And when it goes to media, we should have a trained person who is only allowed to talk to media. Again, that is part of the policy. Not anybody can go and speak to media and represent us. Strict policies. And when it is internal, like fraud, bribery and all, companies can follow zero tolerance policy and everything. In fact, there was one question. One of the director was involved in something. She was just carelessly lost her tab. And the tab was not having a strong password, and that went to media and things become public. Now our policy says zero tolerance. That means she should be terminated. And now she's like, I'm very hardworking. I'm in the company for 20 years. So it's a very big decision to do for the company. However, policy is policy. In that type of answer, you should go with the policy. Yes, go with the policy. She should leave.
You can be more proactive the way like this
Sorry,
crisis
Arjun?
management. We can be more proactive by scenario planning for this crisis management, like this handling of crisis, like the disasters, flood maybe happen. How to manage those type of crises? We can do become more proactive.
Yes. Ideally, proactive is very important, and everybody should be understand how we are dealing with the risk, what is our policies, all of that. And we should respond it. We should not react it in a very short time. We can end up doing even more mistakes. All right. That's it for today. Any questions? About Friday's time, I'll communicate with you. We'll try to do class on Friday, at least a small class for 1 hour to 90 minutes.
Yeah.
Okay.
Okay.
I'll communicate.
Okay.
Yes.
Thank you.
Thank you.
Thank you.